Hey everyone, and we want to welcome you to the Bhair Real Estate Team. My name is Brad. I'm with North Pacific Properties, real estate professional. And today I've got Josiah with North Pacific Mortgage. He's a loan professional. We are the Bhair Real Estate Team, and in our initial video here, we want to welcome you, first of all, for watching. And a series of videos that we're going to bring you with the Bhair Real Estate Team. We want to talk about mortgages. We're going to get into that here in a minute. We want to talk about what to expect in buying, selling process, inspections, that word escrow that nobody has a clue what it's about. We're going to get information and answers for you, and anything else that you have questions on. Feel free to just comment or message us from here, and phone calls, anything, text. I don't care if it's day or night. We'll get right back to you with a great answer, hopefully very soon. So what inspired this video today was Josiah here from North Pacific Mortgage. Thanks for being here.
Yes, thank you.
I've asked him to be part of this video series to explain to really one of our clients that we just met at an open house, Catherine. She came in and she said, hey, I like this place, but I don't know what to do when it comes to purchasing a home. We said, well, have you talked to a loan officer? She said, no. She said, I'm not even really sure what mortgages or anything are. So, hey, Josiah, he's going to be there with every open house that I do as best as possible that he can be there. And we want to answer your questions. So Catherine's been in touch with you, and one of her questions about mortgages are, what are the different types of mortgage programs, loan programs and such out there? So one thing that you told her was the FHA and the conventional loans. Mm-hmm. What is an FHA loan?
All right. So FHA stands for the Federal Housing Administration. It's a kind of a more attainable loan product for people who don't have all the means available to qualify for a conventional loan. The FHA loan has a 3.5% down requirement, and right now there's down payment assistance that covers up to 4%, meaning your whole down payment is covered, and then some of the additional cost, your closing cost and escrow, can actually be lumped in with the offer if you have a good real estate agent who knows how to do that, so that as a buyer you can end up paying very little out of pocket. Now, there are some downsides to an FHA loan. You have to pay up front a mortgage insurance.
Private mortgage insurance,
yeah.
PMI.
Yep, MIP, the mortgage insurance premium, or the...
It's known as the bad word, but it's not terrible if you're just buying your first home and getting into an FHA loan. So could you talk to me a little bit about the conventional loan? We hear that's the better option. Some people may not have the means, but they qualify for an FHA loan. But what is a conventional loan, and how does that work?
Yeah. Okay. So the conventional loan requires 5% down. They're going to have a slightly higher minimum credit score than the FHA loan, and you don't pay an upfront mortgage insurance premium. You do pay private mortgage insurance, but just until your loan amount reaches 80% loan to the value of the house.
Fantastic.
So if you bought a house for $100,000, when your loan goes to $80,000, you no longer pay mortgage insurance, which is what makes it really more favorable than an FHA loan. And that's why you'll hear people talk about putting 20% down. 20% down on a conventional loan keeps you from ever having to pay
out of private mortgage insurance.
Exactly.
It's going to save you a little bit more money in the long run. However, not all persons and people out there are going to qualify for conventional loan. FHA is a great standard. There's other loan programs out there. Could you just mention a couple of them? The VA loan, what other ones do we have?
USDA. You have your jumbo loans.
All sorts.
Yeah, there's a few, and there's attached to all of them all kinds of additional loan products that are just kind of under that umbrella that we can talk about. Yeah.
Great. One thing that I do when I submit a contract as an agent is, or I have a contract submitted to me, is I look for financing options. I actually will have Josiah's professional opinion on that as well. Mm-hmm. One thing we look for is pre-qualification versus pre-approval. Yeah. When someone's pre-qualified, it's not as strong as a pre-approval. In a couple sentences, could you explain that?
Sure. So pre-qualification would be kind of taking somebody word of mouth. Just kind of having a conversation, hearing what their work history is, what their credit score is, things like that, and telling them, based on the information you give me, you're qualified for about this amount, this loan amount.
So it's a guess, pretty much.
Kind of a rough
professional,
guesstimate.
Educated opinion.
Yes, that's Perfect. A good way to put it. Yeah.
And a pre-approval.
Pre-approval, I have you fill out the full loan application. I run your credit. I view exactly what your credit score is. I review your tax documents, your W-2s, your pay stubs. Have you given them all to me. and I confirm everything that you said is true exactly, and maybe you estimated your pay was too high or too low, things like that. It happens. I get the hard numbers, and then I actually submit that loan to Fannie Mae or Freddie Mac's underwriting system, which is desktop underwriter or LP, DU or LP, and then you take it all the way up to the edge, basically, and that program screens the loan and says you are approved and eligible. And then after that, I would write a pre-approval letter, meaning based on this letter, Brad, you can write an offer.
The loan will close. So if I wrote an offer or an offer submitted, one of the biggest questions is how are you going to pay for this? And when you have a pre-approval letter, that's the strongest means of funds other than a cash offer that can be there. So real quick, we got a couple extra seconds here. Would you talk to me about refinancing? Some of you guys out there may have had a mortgage years ago and you're paying 7, 8, 10% possibly, and rates are still at a historic low. Could you explain the rates now, why refinancing might be a benefit?
Yeah. Rates right now, they're competitive. You're in the low 4 region, give or take. Depending
4%.
on low 4% region.
We talk. It's just so natural to us, but go ahead.
If you have an FHA loan, you're paying mortgage insurance for the full life term of the loan. So refinancing is always something worth considering. Get you out of an FHA into a conventional, and you can lump all those costs into the loan. So it's still not a bunch of cash out of pocket at that point to convert over to a conventional loan.
And the more you've paid on an FHA mortgage, the more equity that you build into your home might push you into a better category for conventional. Let's say you own 15 years, you can still get into a 15-year conventional, which will even possibly be a better interest rate. Is that correct?
Yes, because your loan value in that situation would be below 80% of the value of the house, so you want to be paying mortgage insurance.
Fantastic. Once again, guys, Josiah from North Pacific Mortgage. I appreciate you being here. We've got lots of great content coming for you. If you don't know the value of your home, as always, it's free. Let's do a market analysis. We're going to have a video on that coming up here soon. Great. If you have any mortgage questions, please call Josiah, Zahina. Josiah at North Pacific Mortgage, 206-794-4172. Leave a comment below. Tag your friends if they have any questions. We're happy to answer whatever means. Text, call at any time. I'm okay with that. Are you okay with that?
Yeah,
we're here for you.
Yeah.
So once again, the Bhair Real Estate Team bringing the best content for you. If there's any subjects that you'd like to know, any questions you'd like to answer, please let us know what videos that you guys would like to see, and we appreciate you.